I've been recording so much footage. Oh my goodness, guys. Oh my gosh. Alright, I've been recording so much footage lately that has just been getting corrupted. Like corruption after corruption after corruption. I probably recorded like 5 videos outside, and because of the MacBook, I was on. No offense to the MacBook. I love my baby. But still, like, you're getting corrupted because of the warmth outside, and I'm like putting a towel over the keyboard and everything so the laptop doesn't get hot, and it's still getting corrupted. I'm like, yo, what are we doing? Like, what are we doing? Honestly, bro. But anyways, sorry for that little tantrum. We are going to get into this trade recap I have for you guys. So today we took a pretty good trade, as you can see on the screen here. We took a nice short today on NQ. All right, here are my executions, so you guys don't know. So you guys know I'm not capping. We also can head to the Discord here and see there's a lot of people spamming W's. So I do live day trade every single morning, 9:15 a.m., Monday through Friday, unless it's like a bank holiday or something like that. But look, someone's one day from being able to request a payout, $371 W's. So I'm very glad that, we can all win here. I'm also explaining any concepts that people don't understand, so be sure to join that if you want to. The link is in first link in the bio, first link in the description. Sorry, not the bio. But yeah, let's get into this trade today. So like, let me delete a lot of this stuff though. I'm also gonna go into replay mode. Guys, if you want to invest into your future in day trading, bro, get Trading View Premium. I'm telling you guys, it's the best thing, like, probably top 10 purchases, I'm not going to lie, of 2026 for sure. But anyways, let's get into this. So I'm just going to replay it so we can start from exactly where I was looking at when my day started. And I'm just going to kind of walk you guys through. All right. So let's hop on the 5-minute, because that's typically what I'm doing for my general analysis. But actually, no, let's start from the start of our day. Okay. So let's delete all this stuff we have on our screen here. All right, so let's start from the start of the day, okay? Let's start from the start of the day. All right, so what do we see as we're coming into our day? All right, immediately I'm on the daily time frame. That's where I start my daily buys. I go from daily to 4 hour to 1 hour, okay? So, and then for my general analysis, I do 5-minute and 2-minute, and then for my entries, I hop on the 1-minute. So today I stumbled across this daily gap that we were inversing. So if you don't know already, inversing is when we fulfill a gap, okay, and we push higher out of it. So we're inversing this daily gap and pushing higher out of it. All right, so that was my first observation of the day. So I kind of wanted to see us push higher after that, especially since the previous day during Asia session and London session, we were just tanking. As you see right here, we were just tanking and tanking and tanking. So, I wanted to see either two things, all right? First, let me explain what I see on the 4 hour, and then I'll go over those two things. So first here, there's so many gaps here. I see we also have another 4 hour gap. So we pushed lower. Yes, we did inverse this daily gap that we were just talking about. But on this 4 hour here, we can see that we did not yet come into this 4 hour fair value gap yet. So I'm thinking that's a real good magnet for price, because if you don't know, these are all imbalances, all gaps are just places in price where price has not tapped into yet. It has not mitigated that price yet, and we want price to mitigate those points because they are orders. They are pending orders that have not been filled yet. Sometimes they could be stop losses from other people that we want to hit before we can move higher. Sometimes pending orders to be executed, like stop buys and then stuff like that, stop sells, stuff like that. Just a bunch of orders waiting to be executed that price wants to target. All right, that's how price works. All right, it targets orders, resting orders. That's what liquidity is. That's what these imbalances are. All right, they're not just a pattern that we see on the chart. All right, so let's stop yapping, all right? Enough with all this fundamental talk. Let's actually get into the technicals. So we know that we have this 4 hour that we're probably going to want to get into. So we can either do two things, like I was saying earlier. We can continue to push lower towards that fair value gap on the 4-hour, or that's the end of our road down, and we're probably just going to see a retracement, or this being used as a retracement, and then us pushing back higher. Okay, so, and if you don't know what that means, well, in a trend, right, very basic level, but a lot of people don't understand this, but a trend consists of what we call, boom, extensions and retracements. All right, so extension higher, retracement lower, extension higher. That would be a bullish trend. All right, so that's what I'm saying. We could be seeing an extension higher, retracement lower, and then extension higher again. Or, I guess three things. We could be having an extension higher, retracement just comes a little lower, and then into that 4-hour, and then extension higher again. Or we can just be exactly just done with this retracement and just see our extension higher. Okay, so those are kind of like the three things that I think could happen today, just from a daily bias perspective. All right, and daily bias is very important because it is not the trade itself that we are taking, but it does give us like an overall direction of the day. All right, so let's hop back on. Let's hop a little down to the 1 hour, because we go daily, 4-hour, then 1 hour. You know what I'm saying? Let's go. All right. But anyways, let's not get too jumpy here. All right, so we also see, so we're on a 1 hour now. We see a lot more. We see a lot more confluences. All right, so things that we can mark out for price to potentially target for us to use. So we see a lot of hourly gaps up here. Let's just mark some of them out right here. I guess there's only two. I guess three. One up here. So that's one of the things I'm looking at. Are we going to want to see a retracement to come back higher? We're going to see a reversal, because we've been dumping. So I'm thinking we might see a reversal higher. So we look out for that. But what do we also see right here? Remember I was talking about that inverse fair value gap? We can maybe see that right here, where we just come up, boom, inverse the 1 hour gap, and then push lower to the 4-hour gap. So that's what I'm kind of like thinking, through my mind, what's going to happen today. Because that would make sense if we do see what my model is based off of: accumulation, manipulation higher, distribution lower. It would make sense. And that's kind of what's going through my mind when I'm trading. I'm like, would this make sense? Where's my accumulation at? Where's my manipulation leg? Where's my distribution leg? Just like trying to map out these parts yet, even though like all of this, and I literally just hop into the charts. Like it literally is like 9:15 that I'm on right now. So this is not throughout my day. This is all pre-market analysis, and pre-market analysis is very important, right? It shouldn't take hours to do this. Notice how I'm like explaining this like very quickly. It shouldn't take hours, but you should definitely put some, like at least 15 minutes into it, prior to market open. So boom, we're on a 1 hour time frame. And let's see. So what can we expect? Either two things I want to see from our fair value gaps. Either we come to it and rebalance and come lower, or see a full inversion and come lower. So that's what I'm looking at 9:15 here. We can drop down to the 5-minute now, because pretty much for our hourly like bias, we're not going to mark all these out yet, but we're going to focus on this hourly gap here. So between our daily, our 4-hour, and our 1 hour, I'd say our overall daily bias would be that we have a potential, and sometimes our daily bias can be neutral, so we have a potential to push higher, or we have potential to push a little lower and then higher. So like overall, it depends on what happens more on like the lower time frame in this scenario today. All right, so let's hop on the 5-minute. And if you don't know already, like I was just saying, my model is based off of AMD. So let's check that out for those who do not know what AMD yet is. So AMD is when we have accumulation, all right, and this is where like orders are, we're going back and forth between buyers and sellers, kind of creating like a range, some would say, kind of creating structure, some would say as well. But we're initially just setting up for our model so price can come take out a point of either buyers or sellers here, and then distribute in the opposite direction. All right, this is our manipulation leg higher. This is our distribution leg lower. We're manipulating a lot of buyers in a sense here, and then we're distributing all that liquidity that we just captured to all the sellers in the market. Okay, so that's how AMD works: accumulation, manipulation, distribution. So that's how AMD works. I said it twice so you guys can understand. Yeah. But anyways, let's get into our day. So it's 9:10 around here. I hop into the charts around 9:15, and we see within the first couple minutes, we kind of do create like a little, point of structure right here between 9 o'clock and then 9:35 here. So we're definitely going to mark that out. We see we have a clear level of sell side and a clear level of buy side liquidity. So I'm definitely going to mark that out because that sets up for our structure. That is like AMD in a sense. All right. Or at least the A part of AMD. All right. So accumulation, check. All right. Now we're looking at manipulation right now. So I'm kind of thinking in my mind, well, we just kind of created a nice low right here. I think, and we still have this 4-hour gap. It's definitely looking like, we're going to want to target liquidity, which we always look to do. And it's kind of looking like we're going to manipulate and then distribute lower. So that's what's going on in my mind, all right? And remember this hourly gap. Now, I did take a long before the short, all right? And we will talk about that. So I did take a long, all right? I took a long right here because the potential of us continuing higher after we invalidated, this gap right here, after we hypothetically, if we were to invalidate that gap, we would push higher. Okay, but we didn't, so we did get stopped out for our first trade. All right, and that's okay. Even though it was a little more discretionary, it was still going against my original model. All right, so if my model says we're not going to go short, most likely going to go long, so might as well take the opportunity. So we did risk accordingly. All right, so we did lose a little in that play, but that's why I risked accordingly, because I knew I would most likely take 2 trades today if that trade did not play out, right? So which it didn't. So let's play this a little more. Talking a lot. All right, boom. Let's hold on. Let's hop on the 2-minute. All right. May have to back this up a little bit. All right, so we already see what's happening, guys. What's happening? We are on the hourly right here. We see that we're not pushing through. We're not pushing higher anymore. So what's most likely going to happen? Retracements and extension, guys. Boom. Extension lower, retracement higher. Extension lower, retracement higher. What do you think is next? And we're inversing a gap. What happens when we inverse a gap and fulfill a gap? Probably going to push lower. All right. So bada boom, bada bing. We are expecting a push lower. This is clear to us that this was our accumulation. This is validated. We have our manipulation leg higher. Our manipulation leg is coming off of a higher time frame gap. Perfect. This is everything we want to see. Now, very important, so you guys don't get stopped out. We got to see a transition between our manipulation leg and our distribution leg that's coming lower, and that is called a confirmation confluence. All right. I want to see change in state of direction in this scenario. All right, so boom. What is change in state of direction? First, let's go into real bodies versus wicks of a candlestick. All right, because a lot of people don't understand that right here we have the real body of a candlestick. So anytime I say top of the real body, I'm referring to this right here. And anytime I say bottom of the real body, I'm referring to here. Now we have the wicks. All right, wick right here, wick right here. So top of the wick, of course, is up here, and bottom of the wick is down here. All right, very, very simple. But a lot of people don't understand that. All right, so let's get back to this because you're going to need to know that for this. All right, so boom, change in state of direction means we need to identify 2 equal lows first. Equal lows, equal real body lows. Okay, so right here, we can see that we have 2 equal real body lows. We can even zoom in more on the price levels to see that no matter how much we zoom in, we see that we have 2 equal lows here. All right, that's very crucial for us. All right, so what we're going to want to do next is mark out the lowest equal low. So whatever wick, the bottom of the wick that is lower, I'm going to want to mark that out because that is now my confirming low. I'm going to delete this hourly gap because we already know we're coming out of it, so I don't want you guys to get too confused. But all we're doing, and actually, no, never mind. I thought I was on the 5-minute. All right, so all we're doing here is looking for displacement, looking for us to surpass this confirming low to confirm that we're going to push lower. All right, because we can very much come like to a point where we're at this low and then just rip higher. All right, I've seen it happen so many times, and I've seen so many people get stopped out because of so many times. All right, so we want to see us displaced from this confirming low. All right, so we see that right here. We see we come lower than this confirming low on these black candlesticks right here. And then what do we want to see after that? Us to retrace back into a confirmation confluence. Why do we do this? All right, we are faking it. Guys, the market moves off of so much liquidity. It's just liquidity. Price drives off of liquidity. All right, so if we have one, I marked out here a 5-minute order block, so we'll get into that next. But initially, why we're retracing back is because we need to take out more buyers in the market in order for us to push lower. All right, so what we're doing on this retracement higher, coming back into this 5-minute order block here, which means the last candlestick of our previous leg. All right, mark out the real body only. We're just seeing, okay, now we're taking out more buyers. So boom, the sellers have even more liquidity to push us lower. Okay, and that's all we're doing. Just like extensions, guys. Extension, retracement, extension, retracement, extension. It's the same thing, guys. It's the same thing. Same concept. All right. So we're going to drop down to the 1 minute now, because this is where we got to get a little more precise, just with entries and placements for our risk and all of that. Because if you got to focus on risk, if you're not focusing on risk, then you have a little problem. All right. Focus on risk and not the profits. So here, once we see we came back to the 5-minute continuation confluence and we're starting to push in our direction that we want price to come into, we are going to enter. As simple as that, because we see everything we need to see. I see in my trade, we have a great daily bias. Our daily bias said we can potentially push lower, so our trade is lining up with our daily bias. Check. All right, I have 5-minute structure, always on the 5-minute. Check. Or slash accumulation, whatever you want to call it. Manipulation, it's either taking out a point of liquidity or coming off of a higher time frame confluence. We see we have this hourly gap that we are currently inversing, so we can boom mark that out. That we can see that pretty clearly that our manipulation leg is now confirmed. Now we can hop on to either the 2-minute or the 5-minute for our change in state of direction, and then come lower. So we see all our steps equal lows, confirming low, gets displaced from, and now rebalance into a 5-minute continuation confluence. We see a 5-minute order block right here. We mark that out. I see, boom, we are now, last step, rejection. We need to see 1-minute rejection in our direction that we want price to go into. So I mark that out. I see that we see good rejection off of it. I set my stop loss. Always, guys, it's very important to set your stop loss above the previous high of your continuation confluence. All right, so if this is my 5-minute continuation confluence, I'm going to set my previous high. I'm going to set my stop loss at the previous high of the 5-minute continuation confluence. We see the previous high is right here. We're going to set it just above that high, just to give us some breathing room for the trade. All right. Maybe even like this high I could have done, but this is the high I chose today. All right. So because if we went past this high, that would like completely just invalidate structure, and then we would be moving long. So yeah. All right. And now lastly, we need targets. We can't just be aiming for a certain price. We need certain targets. What were our targets today? We had really good points of liquidity all down the board. We could have even targeted 4-hour gap, like I said from earlier. So all of these targets were good. The one I chose to target today was this one. Yeah, even though we had good volatility, we could have definitely targeted lower. So, but this was our targets. So let's see how the play played out. And of course, do a checklist before you enter in. You want to make sure that you're entering in off of the correct, everything's just according to your checklist. So let's see how this played out. Pause. Look how close we got. Because sometimes we want to take out the high that's right above our continuation confluence. So we came really close to that, guys. That's why I said be careful with your stop loss. Risk. I was on the edge of my seat today, but I wasn't even though, because I already knew that either we take that out and we continue to push higher and my trade's just completely invalidated, or we don't. And we win. So that's yeah. So that's why you gotta make sure you're focused on risk before your profits. Focus on what you're doing rather than the outcome, guys. It's a universal concept, all right, and it goes into the charts too. All right, so let's look how this plays out some more. Oh, extendo, bang. All right, bang, guys. That's a bang. All right. So, and of course, like someone say, I'm seeing this in hindsight. No, I actually took this real time, bro. I took this real time. Okay. So yeah, I already showed you guys proof at the start of the video because I knew that would be a comment. But I love the hate. I need more haters, guys. I need more haters, actually. But yeah, that's about it. And then we probably continue lower. Yep, tapped on that 4 hour, like I said we would, bro. So we could have even targeted this 4 hour, right? I'm not saying we did, but we could have, all right? And that would have played out bang. And I wonder where we went afterwards. Let's see it. Let's see. If you were listening, you probably already know. We're probably gonna. Wow, is that? Look, look, watch. Let's speed up. Oh, where are we trending towards? Where are we freaking trending towards, guys? Look at that. Yeah, follow my line. Pushing back higher, guys. This is what I'm saying, guys. Like, you have to be able to read price. The daily buys in our higher time frames are so like, oh my goodness, guys. They're so like we just gotta see them. They're so necessary. They're necessary. All right. So but yeah, I did not take this play because it was New York AM. Or New York PM. I don't really trade New York PM. It's too like it's not volatile enough for me. But this was our trade, and well, if we want to be specific, right here. If you want to take this trade live with me, of course, first link in the description. Check that out, and yeah, a lot of people are catching some bangers. All right, I'm gonna pop up the winner of the last YouTube video, the winner of the money. All right, so I gave away $10. I'm giving away $10. All right, for that video, but this video we're upping the stakes, and I'm probably gonna post a lot of videos, so I'm not gonna up it too much. We're gonna up it to if you watch this far too, so you won't know unless you watch to this far. But if you drop a like, if you make sure you're subscribed, follow to my Instagram, and comment on this video, then I'll enter you in a chance to win $13. All right, so $13 I'm going to give away to one random person at the next video. I will announce the winner. But yeah, congratulations to whoever won. I'm probably gonna pick it out the comments in like the next 5 minutes. So anyways, if you gain some knowledge from this video, drop a thumbs up, and drop a thumbs up, and I'll see you guys next time. Bang, 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 bang.